In this video, we will look at divergence. Please pay close attention, learn this. Try to draw this on the chart in the future as well, because it can be an ultimate help for you. Especially when you look at the weekly chart to find where to sell, where you can buy, bull market top, bear market bottom. But also when you are trading, so you can see when a price reversal might occur if we are in a bearish trend. In this regard, we differentiate between regular and hidden divergence. We will now start with the regular. 1. There is a bullish and a bearish one. It means nothing else. The price experiences a drop, making lower lows, while the indicator does not make a new lower low, but instead, in this case, we use the RSI and MACD, it makes a higher low. And if it does not close at a lower low, then this can indicate a trend reversal in the price. The same applies when it's bearish. Then we simply make a higher high, but the indicator does not make a higher high anymore. And this indicates that with high probability, as we are only dealing with probabilities, we will continue to go down and then the price falls. But how does this look on the chart now? I showed you at the beginning of the video or at the start with the RSI. Settings, you can set this here, yes, calculate divergence. In my opinion, you might not want to take this too literally. There are other things as well. So you can include them to see some of them. That's not bad. It makes sense too. But I want you to learn for yourself, especially when you zoom out. Because he doesn't take into account here that we have massive large chart divergences. We've had them several times now in both bull and bear markets. Now on the weekly chart, you can apply it to any chart, but on the weekly chart, they simply initiated our tops and then also bottoms. So bottoms were precisely indicated. But how does it look now, huh? So you also understand what I mean. You already know RSI, how to input it, how to do it. I'll quickly turn off the yellow line now so it looks a bit cleaner for you. And how do we look at it now? We have the RSI, which had a high here, but is not making a higher high anymore. And that is our first indication when we see that the RSI is no longer achieving a higher high, while Bitcoin, in this case, has made a new higher high in price. That is a clear divergence. And exactly what we have seen here. When we see this now, what you see here, the price makes a higher high, but the RSI does not. This is a bearish divergence on the weekly chart, which is incredibly significant and has already cost Bitcoin nearly 30% due to this divergence. However, we can never rely on the fact that just because we see it now, it will immediately play out. But what happened here as well? The price actually rose a bit further afterwards. And so you can trade a divergence immediately, short it, but with very low leverage, because it doesn't mean that it will play out immediately, or it can also be invalidated. So we will get to invalidation then. But exactly what you see here is simply this massive bearish divergence. If we compare that, we had exactly the same event last time, right? During the last pull cycle, we had a higher high in the price, but the RSI didn't make a higher high anymore. After that, the bear market was initiated. Now we have two bearish divergences, but I can show you exactly in the weekly chart. But here we had a price decline. And we are now going to draw a bullish divergence. And you can see here that we had a falling price, but a rising RSI. Let me show you that again. And that was simply the sign of a bullish divergence. In the weekly chart, this is so decisive. When you recognize how it works, you can really enter into wonderful trades here. But now I've said something. It doesn't mean that these will play out immediately, because if we zoom in here and take a closer look, we also had the opportunity here, since we still had a falling price overall, right? But here the RSI already had a rising area. And that means this bullish divergence was played out slightly here, but then it was pushed further down and simply expanded. And that's why, it might not play out immediately, but instead just grow larger. That could have also happened in this case here, right? That would have been optimal. Of course, if we now say, okay, we go down here. A short, but don't manage to rise immediately, because that can still happen now. That means we would then have a triple divergence. If we extend this further, but also extend the market here, right? So this price area, there is still the possibility that the price might go up here and touch here, and then find resistance here, because we have an ascending trend here. However, the price now does the same here and also touches here. You see, then we would massively extend our divergence, which would move Bitcoin to around $130,000. even though the RSI continues to fall. And then there would be a potentially extremely good opportunity to go short again here or to sell parts. Now we have only talked about the valid divergence. Now we can say, well, we have a divergence here that can then be invalidated, right? Let's assume now we only have this divergence. We don't know anything else now. We leave out what came before and we are now live in the price. This is how it might look to you when you are in the price and analyzing the chart. And now we know the price is going up here and the RSI is going up here and we make a higher high in price again, but the RSI does not make a higher high. One could now, of course, say, hey, I can short easy because we have a mega bearish divergence and that can be super brilliant. What can happen? And that's why it's important to do it with low leverage, keeping the risk correspondingly low with a low leveraged position. Because what happens if the price goes over here? But also here, the RSI suddenly makes a higher high in the middle of it. And as soon as the RSI has crossed this area here, which is marked here, then the divergence is invalid. And this will happen to you more regularly, not very often, but more regularly in smaller time frames, that a divergence simply becomes invalid. And then the price just continues. This can be due to bullish news, it can be due to market momentum or something similar. And you should internalize that. But then we also saw earlier, I'll remove the drawings again. We also have other divergences. I need to get the image once more now. So now we have it here. The image, besides the regular divergence, which is super easy to recognize, it becomes a bit more difficult to identify a hidden divergence. And that means nothing other than the fact that the price is in an ascending trend. But so we make a lower high. We have a high, a higher high, a low, higher low. And then it continues upwards. But the indicator itself makes a new low. That means it continues to go down and is therefore not in alignment with the RSIs as it normally should be, right? And if you recognize this here, then you also have the opportunity to see a hidden bullish and hidden bearish divergence. And if we should really go further down in the weekly chart, we would also have a hidden bullish divergence here. But we can go into the daily chart and take a look here. And there it actually looks very, very much like we have a hidden bullish divergence. Why? If we go in here now, and take this rise here and go in here now, it means we make a lower high next to the high. But at the same time, the indicator here makes a lower low. It's a bit harder to see now. We need to expand it a bit. There you see that the indicator has made a lower low here. And this could now lead us to a hidden bullish divergence. It means, it's like a price action beforehand. You see it here again, D, so you can see it live on the screen. The price makes a higher high, but the indicator makes a lower low and not a higher one. The price makes a lower high, but the indicator makes a lower low. And that's exactly what you experience here. And it's the same the other way around. If the price now makes a lower or higher low, but the indicator makes a higher high, then we have the same problem, that we are entering a bearish price area. This image you will also get included. You can print it out, you can save it, just so you recognize it for yourself, and simply look for yourself where divergences can arise and how I then play them out.